Hi, good evening traders. Namaskar. We are looking at the daily chart of the Nifty month futures, and it was yet another day of drama. The index did manage to go all the way up towards the level of 16,398, almost 16,400, just to disappoint towards the afternoon and manage a close at 16,164, significantly slipping from its intraday highs. Does this make the underlying trend vulnerable for another reversal on the downside? Can we expect the index to take the level of 16,400 on the upside sometime this week? And by the way, what happened to the metal sector and especially Tata Steel? Let's take a closer look at all these questions in this particular market wrap. So here we are looking at the daily chart of the Nifty month futures. So one thing is we have a higher high and a higher low for the last two trading sessions now, which is a good thing. Number one, I particularly call this bar a decoy bar, which means that in case if you have a move above today's high, that is 16,400, within the next 1 to 2 trading sessions, that's tomorrow or day after tomorrow, then we have a confirmed strong low in place. That will be a very strong sign of bullishness if the prices takes out 16,400 within the next 1 or 2 trading sessions. Let's take a look at the smaller time frame. Over here we have come down to the 75-minute time frame, and I hope you remember this range that we had drawn. And let's extend this range, and this is where the index is yet again facing resistance. The good thing is, like last time, the short-term trend has once again reversed up. Last time when it reversed up, it reversed on the downside mercilessly with a big gap down. Remember the 200 plus gap down. This time it's more like a structured correction. There's no nasty gap downs because the market opened pretty okay into today's trading session. So any kind of surprise may happen tomorrow. Having said this, couple of things which is confirmed. Number one, we have a strong resistance at 16,350, 400. So you'll find a lot of call writings happening here. On the downside, the index has managed to give a healthy correction, consolidation. Well, you had this kind of a move, right? After which there's a little bit of 20-30% retracement is bare minimum that we can expect. So as of now, this 16,164 close, as of now, this drop from the intraday highs to the CMP, we will consider this as a short-term correction of the trend reversal that we just noticed recently. We're not going to go bearish right now. We would see that whether the index manages to sustain. In this particular bounce back, if we draw a volume profile, I'm not gonna, okay, let's take it from this lowest point to the last bar. Then you can clearly notice that the majority of the volume profile, the majority of the volumes have happened in this zone. And this zone is nothing but 16,100, 150 towards 16,200. So 16,100, 16,200. Please remember 16,100 and 16,200 is the important short-term support for tomorrow. We also had this range, so if you draw this, if you extend it further, this is exactly where 16,100, 16K lies. So in case the index comes down close to this zone and bounces back, we will consider that as a healthy sign of this short-term uptrend. Again, below the psychological 16K, we are back to that volatility-filled, frustrated zone for the index. We can't do anything about it. We just have to deal accordingly. But it seems like this time it's going to sustain. What about the Bank Nifty? The Bank Nifty slipped same ways. The same range for the Bank Nifty stays there. And if we draw the volume profile for the Bank Nifty, then we will find that it has just inched below it and the bank Nifty zone was 34k to 34,250. So remember this level. For the bank Nifty, it is 34k, 34,000 to 34,200. That's the zone where the index should face some support, and that's exactly where it has closed, 34,110. So it is at supports. Nifty is a little away from the supports. Today's high is the obvious resistance for both the Nifty and the bank Nifty. 34,800 for the bank Nifty, 16,400 for the Nifty, 34,000 and 34,100 for the bank Nifty as support, and for the Nifty it is the psychological 16k, 16,100. This reading from price, does this corroborate with the reading from the open interest? Let's take a look at the open interest of the Nifty first. So if we take a look at the Nifty open interest, we will see that call writing has been more than relative put writing, of course. We can very clearly see that 16,300 call unwinded and it shifted towards 16,400. 16,400, this is 16,500. So majorly shifted towards 16,400, 500, little at 16,350. But 400 and 500 are where the major call writings have happened. So there you go, 16,400 towards 16,500. 16,400 is your immediate resistance. Put writings, we do see some happening here at 16,100. And if we go down further, we find at 15,900. So these are where the put writers are fairly active, but I would consider this one as of now 16,100. So it more or less aligns very well with the levels that we derived from the charts. For the bank Nifty, we can clearly see 34,500 is where the majority of the calls as well as put activity is happening. Big put writing as well as call writing happening here at 34,500. Let's go to the chart of bank Nifty. Here we are. Yeah, so 34,500 is somewhere. There you go. This is where 34,500 lies. So this is going to be really interesting, because if the short-term supports, which is close to that psychological round figure of 34,000 holds for the bank Nifty, then 34,500 is the immediate short-term resistance. And if we see a good move above 34,500 tomorrow or day after, go bullish, blindly go bullish for both the Nifty as well as the bank Nifty. So wrapping it up for the index, short-term uptrend is still there in place. We will consider today's slippage as a healthy short-term correction, and we would like to see a revival of buying tomorrow, at max tomorrow or day after tomorrow. If the index slips, then as I said, we are back to a volatile zone. If the index shows strength, especially if it comes tomorrow, that will be a very good sign of strength coming back. Then for the rest of the week, you can clearly stay on the bullish side. I would say as of now, let's stay cautiously bullish. Now for the stock, or the stock which mattered a lot in today's trade, that's Tata Steel. Closed down 12.5%, big gap down. The stock had already moved into a downtrend as per our moving averages quite some time back. So a downtrending stock falling further is not a big surprise. These are the short-term moving averages that I have. These are the long-term moving averages. Both clearly reflects it was already in a downtrend. But when we have a move in the size of around 10-12%, either up or down, these can lead to structural changes. And I would like to show you the weekly chart, wherein this particular stock has just broken below a very, very important zone. This is a very, very important zone because you can clearly notice the amount of time the stock had spent its time here, and this level is nothing but close to that psychological 1,000. This is 1,050, 1,060, 1,050 to 1,100. Let's say 1,000 to 1,100, right? And today the stock has kind of tested at an intraday low in the futures market 1,001, and it's closed at 1,026. Nevertheless, it has given us a nice breakdown. This is the weekly chart, so we have to wait for Friday's close to confirm that whether we have a breakdown or not. But if we get this breakdown, then we should brace ourselves for some more weakness. Generally, when you get these kind of breakdowns, what we generally notice is after breaking down, it gives a throwback, it gives a kind of a pullback close to this zone, and then it wants to fall more. So we would closely look out for that kind of a bounce back. Look at the volume profile of this entire stretch, that entire leg on the upside. Shows a decent amount. The max volume had happened at 425. Don't get scared. But the majority of it happened here. You see that there is not much of a difference in terms of the max volumes at this bar and this bar. So I'm going to ignore this. Rather, more important lies at this range. So this range is at 788, around 790. It's got a base on the downside around 600. So 600, 750, 800. So 600, 800. 600, 800 kind of a zone for this big important stock in a long term, from a long term perspective, will give us, I'm just drawing the fib retracement, will give us close to, what is this, 61 point? Yeah, 61.8 retracement. This one. It just broke below 38.2, so 50% is around 900 and then comes 750. I don't know whether this level will come or not. It's very, very early to call this. Metals have been a very, very strong sector. There's no doubt about it. The monthly charts will not look that bad, right? The monthly charts will just look like a zigzag ABC kind of a correction on the downside. So nothing fancy in that. But on the weekly time frames, once we have drawn these levels, and I would like to keep it so that we can observe, wait for any kind of a bounce back. And 1100, 1095, these are the futures market rates, is where one can look to initiate any kind of short positions. For long-term portfolio building, I would suggest wait out a little bit. Let's give this stock a little bit, give this sector a little bit time to see whether and where, at what price it wants to stabilize. But either of the two things will happen. If the stock bounces back immediately this week or later next week, then this will be a breakdown failure, which I don't think so. The moving averages have started to open up. On the other hand, if it confirms that it stays down below 1050, closes below the psychological level of 1K, then I think you should wait for 890, 900, and worst case scenario for this fall is around 750, 800. I would suggest once it breaks the psychological 1K mark and moves towards 900, that is where you should, that is where it should be your first level of entry in your long-term portfolio. And if it continues to disappoint you further, then towards that 750, 800. I would not suggest to add any further beyond that if IFF, if it falls below those levels. So patience is a virtue, and let's see how this breakdown, this breakaway, is it a runaway gap? It looks like a runaway gap to me. How this runaway gap extends this fall further on the downside. Do let me know your thoughts about metals and Tata Steel particularly, and let's see what's in store for us in tomorrow's trading session. Take care of yourselves, trade well and trade wise.